Good evening. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're here now on Wednesday, the 16th of October, 2024, getting on to 6 p.m. Central Time. What an interesting time in the markets. You know, we're now looking at, today the Bank of England came out, actually not the bank, but their National Statistics Office came out and they showed what their CPI, their price increases, are doing. 1.7%, folks. That opens the door like this for the Bank of England. Come on, boys, let's do a cut. So you're going to see a happy prime minister. I think you're going to get a nice cut out of that. Tomorrow morning, we start off with Miss Lagarde. She'll be speaking for the European Central Bank. Chop, chop, chop. Look for cuts to come in there. Bank of Canada coming right after that. Bang, bang, bang. Look for cuts there. And the question is, will we get enough weak data to at least get a 25 basis point cut? It can go either way in America. Our economy is stronger than everybody else's. You've got 4.1% unemployment. Remember that. You have a consumer who doesn't know how to save. They just spend, spend, spend. And we have a government that doesn't know how to cut any costs. I mean, no costs. And we're going to be in big trouble down the road. You don't have to believe me on that. You cannot keep adding to the deficit and have 6, 7% interest rates and think you come out of this in good shape. You can't. You've got to somewhere along the line make these cuts, and no candidate I see has talked about cuts. I give credit to Trump in this sense. He did talk about Elon Musk and said, yes, you can negotiate contracts to cut the cost of them, and that is a form of cost savings. But I didn't hear him say, let's get rid of programs that spend money. It's let's spend less money. That's not the same as a cut. I hope you appreciate what I'm saying there. Now, one of the things I told you I was going to do some special reports. I knocked off one today. And if you go to our website at iraepstein.com, it's free. It's right on the front page, this one. And it'll talk about interest rates. It's about 5 minutes long. And it's the trifecta coming at you. And that's what I wanted people to see. And then I look at it that what you're going to get going into year end is more buying of stock by companies. I think the combination of rate cuts, that, and I look at the stock market and I'm just very, very bullish going into year end. I also look at gold, and I like gold a lot because this unabated spending, and with the dollar even strong like this, not able to hold gold back, where can gold be going? And to me, that's a big, strong story. Now, tomorrow morning, you're going to get a lot of data. You're getting the Philly Fed business activity at 7:30, the advanced retail sales data. And by the way, while I put these up here for you, in my subscriber videos, I put out in my written updates the actual numbers the trade is looking for. I just give you the headlines here. Folks, this is free. I got people that pay me for a lot of the data and ideas I have. So I hope you would join them in support of that. Philly Fed, the advanced retail sales, jobless claims at 7:30. Federal Reserve's going to release their monthly industrial production figures at 8:15. National Association of Home Builders released their monthly housing index. Not sales, that's an index. Remember that. Business inventory data comes out at 9. Then we get the EIA stockpile data. That's going to come out at 10 o'clock. And we just had this afternoon, the API number came out. And as you could see, you fell in all the categories. So a little bit supportive. That's one of the reasons that right now the crude oil is up a little bit. All right, so those are the ways that you look at it. We haven't heard what Israel's yet going to do to attack Iran. And each day that goes by, I look at it as a day of a blessing in that way, because I don't know where this whole thing's going, and I don't think anybody else does. When you look at the S&P on a closing basis, if the market just finished here right now for the week, you're at an all-time high close on a weekly close chart. When we take a look together at how the chart action's been going, very stable, not big action like you had back here, much tamer, and the market continues to work itself higher. People will say it's overbought, and I say, and I pointed this out to you if you looked at the charts. Let me take you back to something. I think this is it, my Season X chart. And I'm going to come over here. I had this out for you last about in September. So we were just at the end and now we're over here. This is what I said to expect. I haven't changed my opinion. Does that mean you go up, you pull back a little? Yeah. But this is the overall pattern that I'm expecting is going to happen this year. So I haven't changed my opinion on that at all. All right. So I like that. I can put in different dates and times in season X. Micro Mini S&P 500 index moving upward over the 18-day average. So the resistance should be the Bollinger Band, and that's containing the market right now. If you don't see that, come on over here and I'll hit you over the head like that. Come on, take a look. You try to get there. You're pushing on it. You're not running away from it. That's very bullish action because what it does is it starts getting you into the embedded stage. What happens with slow stochastics is they'll move from oversold to overbought, back and forth, but they go through stages. And in bull markets, they go through a lot of bull stages where you get both numbers going sideways over 80. And when they do it, it often gives the market an impetus to come up. When that part is lost, you get your breaks in the market and so on and so forth. And you try to take advantage on the breaks as to coming into the market at spots you think where the momentum is going to pick back up. In the NASDAQ, look at the narrow channel you have in this market. That's not bearish. This market's building momentum again. I still think it's ultimately bullish. In the Dow, same thing, not embedded. The S&P is the strongest of all that so far, but a 3-year high in the cash market on the, they said in the Russell, you went up to. Now the futures are a little different. You're not up to these highs right there, but they're talking the cash market. I can't argue that. And this market is what? You're seeing rotation. So it could be here, it's other parts, but people are saying if the markets are good and they're going to keep going, this looks a little cheap. It hasn't done anything. Now, that doesn't mean you just blindly buy a whole index, but you're getting different components in there that are making its move. When we take a look at the 10-year note, this is what I was talking about. The market, as you can see right here, let's get to today's close. This is Wednesday the 16th. The market closed at 2050. In order to lose the bearishness of the market, 2050 doesn't do it. You've got to be over 21 in the marketplace. Here you were Tuesday at 1565, 2050 today, and watch, 2269 coming in. If it stays lost, I look for the market to be caught in between right here, these two numbers, the 100-day and the 18. That's what I'll be looking for. As we take a look at the 5-year, the reading's even higher. And if we come back a day to today, you could see you lost the embedded reading. So as you go down into the 2-year, it's even more pronounced there that you get to the point where you see the bullishness developing and the markets are coming up. They don't want to stay under these averages. I don't know how much they can rally yet. I think what they'll be waiting for, believe it or not, is more CPI and PPI data to be certain that they've got what they want and that the Fed is going to make that 25-point move. I don't look for a 50-point move out of the Fed, given all the data I've seen so far, but I think the Fed will continue to cut. When I take a look at the dollar index, you never fight, in my opinion, an embedded reading. So bullish is the only thing I'm thinking until the red line closes under 79. And could it get up towards the 104 area? It could. I mean, it's winning by default is we stay very strong in everything we're doing, and other economies are weaker and they have to get ahead of us by cutting rates in front of us. That'll change eventually. We will stay up too high. They'll start coming up and we'll feel that pain and it'll go a bit like that. And that's typical as to what happens, especially in currency markets. But as the dollar keeps going up, what does the euro keep doing? It keeps going down. The pound today, down. Wanted to see CPI. So I think the market's now in line to challenge 129.59, the 100-day average, but it could be working its way into here, 128.76 to 128.05. What's going to make it go up a lot? That's what I'm not seeing. Right now, I think that today's numbers was pretty much the, if you will, the baker sitting there making his cake and going, I got the frosting, now I can put it on, and that frosting being a rate cut. When I take a look at the Bitcoin news, and I'm going to repeat, Mt. Gox not selling all those coins, that is what put the market up, in my opinion. Crude is a different world here. Now you've got a lot of crude. Suddenly OPEC, as you know, this week changed its posture. It's more like the IEA, not seeing as much demand, not seeing the Chinese demand coming in the way that it was. China could be the big surprise and put this market up at any time. Israel could be the big surprise, and they say one thing to the U.S. and they attack the oil fields. We don't know where you're at. But barring those two wild cards, no, this oil still looks to me high, well supplied for economies that are slowing down and need to get rate cuts in order to keep them elevated. Why does oil go up on that scenario? Same thing on WTI would be my picture there. Same thing in heating oil temporarily. Mother Nature will come to the rescue of that market. And nat gas, I'm just so pissed. I had it so on the money and it just fell out of bed. And I kept saying to you, this is a big trade, and it turned out to be that way. All right. That's how life goes. You know, you go with it back and forth. I watch because I put out recommendations in futures, ETFs, and stocks. And I watch the ebb and flow of how they go. Right now, my futures aren't hitting the way I want them to hit. I'm not getting killed. They're just not hitting. It's home run time in the ETFs, the stocks, and the others, one after the other. You learn that the techniques are the techniques. Nobody walks on water. When they all hit at one time, great. Well, I'll probably get my hair dyed. But until then, I'll leave it gray with all the pressure. I'm Ira Epstein. I'll catch you all in the morning.